Hey everybody, welcome back to the channel. I'm Robbie Craig of the Flip Flop Flipper, and today I'm going to talk about the pros and cons of the 7 best real estate investment strategies. Let's get into it, guys. Number 1 strategy that you can use, it's one of my favorites, that's the buy and hold method. So we like, as value-add real estate investors, to buy properties, fix them up to their highest and best use, and hold on to them for a long, long time. The pros for the buy and hold method: appreciation. Prices go up over time. Own it long enough, you're going to hit a grand slam home run. We love it. Passive income. What's that? Well, through rents, if you own it long enough, you'll get something close to passive income, although it's a lot of work to get there. Tax benefits. You're going to save money on the interest expense. You're going to save money on depreciation. There's all kinds of different ways that the government likes to give you tax breaks for owning things for a long time. They love real estate investors. And leverage. You can use other people's money to buy these properties, and it's a beautiful thing. It's one of the reasons that everybody should become a real estate investor, because anybody can do it, and you don't need a silver spoon in your mouth to get started. What are some of the cons for the buy and hold method? Maintenance. You're always going to have work that needs to be done. When you own something, you got to take care of it. Vacancy risks. If you are renting something out and it goes vacant, you still have the expense, the interest expense and the upkeep and all of that stuff. You got to pay the taxes. So if it goes vacant, that's a con. Market fluctuations is another con. If you own something long enough, in theory, the market could correct and come down for a time. But here's the thing. Generally speaking, the market goes up and to the right if you own something long enough. So that's not that big of a risk, but it could be a short-term risk. And liquidity. People say that this is a risk. So if you're in a bad market, it's harder to sell. Real estate always sells, though. It's not as liquid as going to the bank or going to the stock market. But again, these risks can be mitigated, and buying something and holding it long enough is always going to be a grand slam home run. So it's our favorite way. We love to buy and hold and get that passive income. Number 2, house flipping. So this is probably the real estate strategy that we've done the most of. Over 25, 26 years now and 3,000 deals. I would say the very, very vast majority of them were house flipping. We would buy a house at a foreclosure sale, fix it up, and then sell it. And what are the benefits, or what are the pros for house flipping? You can get high returns, chunk money, a lot of money at one time. When you're a house flipper, you don't have to time the market. You can just buy something low, fix it up, and then sell it quickly. If you're in and out, you're not subject to the market fluctuations as much. Skill development. House flippers are going to learn everything there is to know about real estate investing. You're going to buy it, you're going to sell it, you're going to do everything in between. You're going to deal with the contractors, you're going to deal with the lenders, you're going to learn how to do title work. Everything about this is an education for you. So if you can buy something, do the value add, fix it up, and make a big pile of money, and along the way get a great education because you're doing it, what a benefit to being a house flipper. So cons, there's risk associated with becoming a house flipper, especially if you're a newbie and you've never done it before. There's a chance that you could be wrong about the purchase or be wrong about how much something costs to renovate, and it costs you some money. And so there's a risk of losing money. Another con for being a house flipper is that it's capital intensive. So if you don't have a big pile of money, if you don't have a rich uncle, you're going to have to learn how to find partners. You're going to have to go to hard money lenders or deal with banks. But it is capital intensive. So you're going to need money for buying it, especially if you're buying something that's distressed. Generally, you're going to have to pay cash or get a hard money loan. And then you're going to need money to fix it up because contractors aren't cheap. And then you're going to need holding costs because interest is expensive as well. So it's capital intensive. House flipping can be time consuming, guys, but what job isn't? What have you ever done that was important that didn't cost you some time and effort? It's a con, but guys, you're going to learn something. It's going to make something out of you as well. Let me just add as a bonus here on the house flippers. This is a great way to become a real estate investor, and all of the cons are learning experiences for you. So you learn by doing, or at least I always did. That's something that you'll get out of this that's a massive pro. You can mitigate all of these cons in these first 2 methods simply by buying things right. So we've got other content on that. In fact, we've got a whole community over on Skool that we'd love for you to come and be a part of. The link is in the description of this video, so check that out. This is a great place for you to come and network with us, to come and learn from us, and to come and ultimately do deals with us. Guys, we don't do anything on this channel where it doesn't ultimately lead to people becoming real estate investors and doing deals together. Whether you partner with us or partner with other people inside of the community, come check out what we're doing on Skool. As part of our Skool community, we've got a course on fix and flip. So if you want a really deep dive into this subject, join our Skool community. Number 3, REITs, real estate investment trusts. Here are the pros of investing in REITs. And this is something that I don't have a whole bunch of experience about, but I wanted to put it out here because there are so many different people out there and so many different types of real estate investors. And this is a really great way for people to get their foot in the door and invest in real estate. And some of the pros to REITs are amazing. You have liquidity. So you can get in and out of a REIT just like you can as buying in and out of a stock, but you have some exposure to real estate. Diversification. So if you're owning stock, guys, if you're watching my videos, obviously I'm telling you that you need to diversify by becoming a real estate investor. And diversification to me looks a lot like having a flip, doing some buy and hold, maybe doing some wholesaling, maybe even you invest in a REIT. I don't have a whole lot of stock market experience, and so I don't like to invest that way. Another huge pro for investing in REITs is that it is a passive investment. So you're going to let someone else do all of the heavy lifting. All you've got to do is invest some money. Don't invest more than you're willing to lose. Like any other investment you could lose, you probably won't if you're investing in REITs. Most of the time, it's a pretty safe, a pretty low return, but it's a nice way to get started easy. And it truly is close to passive. You don't have to do very much at all. I would say that it is passive income. And the final pro is dividend income. And dividend income is a pro because it's taxed well. Number 4, short-term rentals. This is one of my new favorite ways to invest. Guys, I've been doing this for 25 years. And when I first started out, can you believe it? There was not even something known as Airbnb. It didn't exist. And so I went many, many years without ever investing in this way, but we are investing millions of dollars into the nightly rental space. So here are some of the reasons that we're so excited about investing in the nightly rental space or Airbnbs or small guest house hotels. There's massive high income potential. The second pro to short-term rental is flexibility. Owners can use the properties when they don't have them rented out, or they could rent them out when they're not using them. So for instance, I'm living in an Airbnb right now because we sold our house and we didn't have a place to go. It was nice that we had a furnished apartment in a really nice part of town, and we just moved in there. I'm ready to get out, but it was nice to have that flexibility. Another pro to short-term rental is the market demand or high demand in tourist areas. And adding to that flexibility thing that we just talked about, if you like an area and you'd like to live there in the future, you can invest in this way, and then you have a spot to go when you're ready to retire or you just want to travel. There are still some cons to the short-term rental strategy, and here they are. Regulation. Regulation is a bummer. And cities all over the U.S. are cracking down on the Airbnb, and they're making things harder and harder for the short-term rental strategy. Short-term rentals can certainly be management intensive, and this is definitely a con. So it's a lot easier to rent something long-term, way less management. It's high-intensive management, and it's costly if you're going to hire someone else. So just keep that in mind. Seasonality is another con. Income can be based on tourist season. So we have an off-season here where we invest in Puerto Rico. When we're doing this type of investment, that from like the end of August through the end of October, it's the low season. The rest of the year, pretty much the high season. So it's a great place to invest in short-term rentals. Number 5, real estate wholesaling. Pros to wholesaling: it doesn't take much money. It's a low capital requirement. You can put something under contract for a few $100s of earnest money deposit and then flip your contract to the next buyer, and you really didn't have to have very much cash out of pocket ever, if any at all. So you can do this with no money. This is a great way for beginners to start, and many of you who have never done any real estate investing will start this way in wholesaling. You're going to have quick profits. So another pro to wholesaling is that it's quick profits. You're in and you're out, and you could be making money in the next 30 or 40 days. Wholesaling gives you a chance to not only learn the market, but also build a buyer's list. So that means you're interacting with other real estate investors. And guys, this is key. Networking is so powerful. You're going to make more money networking than just about any other way that you can spend your time. So wholesaling, that's a huge pro. Here are some cons to wholesaling. Wholesaling means that you're going to look at a whole lot of real estate. It's going to require of you a lot of time, a lot of effort, and you're going to get told no quite a bit. You're going to have things that go under contract that don't ever sell. There's just a lot of time and effort that's going to go into it. Second con to wholesaling is that there's an incredible amount of competition in this business. So you're not the only wholesaler on the block. More than likely, there's dozens of you, and you're all fighting for the same good deal. Another con to wholesaling is that you're going to have ebbs and flows of cash. You're going to have times where you're rich and times where you're poor. It's not a consistent business until you get really good at it. But it's a great way to become a real estate investor. All right, number 6, commercial real estate. Pros: there's a really high income potential investing in commercial real estate. The lease terms are better on commercial real estate. You're generally going to get higher rents, and they're going to be for a longer term. So you get that stable income, and you can really earn great profits, especially when you're doing value add real estate in the commercial space. So if you can reimagine something that's been distressed and bring it up to its highest and best use, and then go rent it out commercially, wow, what a strategy. And when you get tenants in a commercial building, they're generally going to be more reliable than the people who are renting houses. So they're businesses and they have income and they're generally going to be good tenants. You don't see as much in the way of evictions and you don't see as much in lost rents. We've said this one before, but appreciation. Commercial buildings are going to appreciate over time. If you've got a good, steady A-class tenant, you can expect great appreciation. Cons. Investing in commercial real estate is a lot more complicated, more complex than residential real estate. Commercial real estate is capital intensive, so you need a lot of money to get into this game. Generally speaking, the commercial properties are a level X from the housing. So if you're investing $100,000 on a house flip, you might be investing $500,000 in a commercial building or even more. So it's really capital intensive. Market sensitivity in the commercial space. So things can happen like the big flu, like COVID, and people don't want to go to work anymore. And commercial buildings, they're going to take a hit because of that. So traditional office space is being reimagined because it's really gone through some downturn. Another con to commercial real estate is it's highly sensitive to fluctuations in interest rates. So not only are businesses affected when the interest rates go higher, but it's harder to borrow money. And what happens is most commercial real estate is sold on a cap rate. So as interest rates go higher, your cap rates go down. So that's bad. Number 7. This is one of my favorites. Guys, we've invested in all of these strategies. This one right now we're doing quite a bit of. It's hard money lending or private money lending. Here are some pros. Hard money lenders or private lenders get high returns, and I would say safe high returns. Generally in first mortgage position, tied to real estate, and tied most of the time to investment real estate. So people that are borrowing money from hard money lenders are other real estate investors who are known to have a proven track record of making good deals and being successful. So this is one of the safest ways for people to invest, and you still get a really high return. These loans are generally a short-term commitment, so this is an incredible plus. Your money comes in and comes out. So if you have other things that you need, you can look to when you're going to have a liquidity event and pull some money out and then keep going. Lending in this way, you're lending against an asset. So you don't have to lend directly or entirely based on someone's credit or how well they perform. If they buy something well enough and they bring you in, you're lending at a price that you don't mind owning it if you had to take it over. Another pro to this type of investing, and this is one that I love, you have flexibility. So everything's negotiable. You can negotiate with your borrower the interest rate, the length of the interest, or the term. You can talk about points. You can talk about prepayment penalties. You have so many ways and levers that you can pull on to add to what you're making and to increase your cash flow. Here are some cons to being a hard money lender. There's always a risk of default, and borrowers may not pay. And if that happens, you might have to foreclose and take the property back. But again, if you're lending it at the right price on a building that you don't mind owning at the price that you're putting out anyways, that con can sometimes make you a fortune. Like everything else, due diligence is going to cause you some work. So while I said earlier that it's passive, it's not completely passive. You need to do due diligence on both the borrower and the property and make sure that you're getting yourself into a wise investment. Another con to this is that it could be liquidity, right? Your funds are going to be tied up until that property sells or until your term comes to an end and they refinance you out. And there are regulatory risks. You want to make sure that wherever you are that you're allowed to make these kind of loans. So for instance, in Puerto Rico, if you're not licensed, you're not supposed to be doing it. We love hard money lending. We do it in the States. We do a variation of it. We do hard money partnerships on the island of Puerto Rico because there are licensing laws. So regulatory things, those are a con. You need to be aware of your environment and where you're at. Don't get yourself in trouble. So guys, that was 7 ways that I like to invest. Over the last 25 years, I've used all of these strategies. I just went through them super quick and gave you the pros and cons. If you want to learn more about this stuff, come join us on Skool. We can deep dive into any of these subject matters. We are really doing all of these types of investments, and you're invited to join our community. It's a great place for you to come and learn, come and network, and ultimately let's do a deal together. Thanks for watching that. Give the video a thumbs up. And if you haven't subscribed to our channel, come on. What are you waiting on? Let's do this. Stuff is gold. We want to make real estate investing easy for you. God bless.